Your brand new iPhone deserves the best protection, and the iLune 3-Pack Screen Protector plus 3-Pack Camera Lens Protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Hey Voro viewers, welcome back to our channel where we dive into the world of finance and economics. Today, we're going to talk about why Asian markets are looking up despite a weaker yen, US stock futures are on the rise, and what that means for the Fed's next move. So, let's start with the yen. The Bank of Japan's minutes from their last monetary policy meeting did lift demand for the currency, but then some pretty bad data came out of Japan that made investors rethink an October rate hike. And guess what? That decision is now looking less likely. Now, when you combine a weaker yen with risk appetite, it's like a domino effect. The Nikkei 225, one of Japan's most popular stock indexes, is up 0.13% in morning trading, and the US dollar's value against the yen has fallen 0.16%. That might not seem like a lot, but it's actually a pretty significant move. But here's the thing, this isn't just about the yen. The US stock futures are also on the rise, with the Dow Jones E-mini climbing 88 points and the Nasdaq 100 gaining 47 points. And that's largely because investors are looking to the US labor market data later today and how it might affect interest rates. Now, some economists are warning about stagflation, a situation where inflation is high, but growth is slow or even negative. And with the Fed already dealing with high inflation, this could be a big concern. But others think that if the data comes out positive, we might actually see the Fed ease up on its interest rates. To understand why, let's take a closer look at some data from the Kobisi letter. According to them, U.S. aggregate weekly hours worked has fallen by 0.2% over the last 3 months. That might not sound like much, but it actually signals that companies are reducing work hours before cutting jobs. And in previous cycles, that's often a sign of a recession. Now, we also have GDP data coming out later today, and some economists are forecasting a rise in inflation. Specifically, the core PCE price index is expected to be 2.9% year-over-year in August. A higher reading could delay the timing of a Fed rate cut and raise concerns about stagflation. So what does all this mean for Voro viewers? Well, it means that US stock futures are still looking pretty bullish, at least for now. But we're also going to have to keep an eye on FOMC member commentary, US economic data, and the Bank of Japan's rate path. And let me tell you, Friday's inflation data is going to be pivotal. If it comes in higher than expected, we might see a reversal of September's market gains. But if it's lower than expected, or even better still, cooling inflation, that could extend the rally and lift sentiment. That's all for today, folks. Thanks for watching Voro, and don't forget to like and subscribe for more finance content.